I'm doing
Oh,
great. I mean,
good.
no, I really pulled most of my assets out of the market a year ago, just ran to cash, and that proved to be a smart move.
Hmm.
I've been a big Bitcoin guy the last little while. I've put a bunch of study into that because I've been kind of freaked out of what's going on with, fiscal policy with the money managers from government to Federal Reserve, central banks around the world. I just don't see accountability. I don't see good monetary policy. There's no responsibility. And so it's made me seek alternative things for it's like, hey guys, like I don't like what you're doing at the top, and you're picking favorites. Like when the bailouts come, they're selecting who gets bailed out, and I'm not a huge fan of that. So it's definitely impacted what I'm doing as far as investing and whatnot now. But as long as this system goes on, you can't fight it or you'll get steamrolled. So I've placed my bets accordingly.
Well, that whole dissertation you just gave, I
Yeah.
wish we had recorded because that
But
is.
we have it recorded.
Oh, perfect. Good, because that's a good segue into getting a conversation between the two of us because we're very like-minded, so we
Yes.
can we can put some texture onto that.
Perfect. Sounds good. I do want to just periodically maybe just plug where people can find you.
Please.
The Do you want your Twitter profile put out there?
Twitter at Market Minute. Also, really important for people to know, A, if they go to our website, marketgauge.com, the pop up that they see is my Outlook 2023, which actually has been extremely right on,
Yeah.
and covers a lot of the things that I know you wanted to talk about. And B is I write a daily blog.
Yes.
And so, this is great ways for us to gain some exposure to the website and also obviously have people buy into the getting some of the free content that we have.
Perfect. Yeah, that sounds great. No.
Yes, and just so you know, I am very, very judicious about what I agree to do these
Mm,
days because I
yeah,
am very busy.
sure.
And I like you. I don't know
Oh, thank
why,
you.
although you already made me laugh, so that's always a plus. But I know you have a small follow, and
Yes.
I thought, I started out small, so it would just be fun to see if we can actually increase the exposure a little bit. Um,
Absolutely.
yeah, so it's a win-win for both of
Well,
us.
I
Okay.
really appreciate that. And
Oh, well, thank you. And I think part of the reason why I share so much, well, besides the fact that obviously social media makes it possible, is my background in trading started out on the Commodities Exchange. I was there in New York for 13 years,
oh wow.
which is a place obviously of intense business and huge money transaction,
Hmm.
but also a very, very social environment because you're literally on top of many, many people every single day with a noise level that very high for the most of the time, not
Right.
always. And you kind of get to know somebody when they're spitting on your
Right?
yeah,
Oh,
or you figure out what they had for lunch, if you know
oh
what I
my
mean.
gosh.
Yeah, I mean, this was such an intimate place to be.
Hmm.
And I am so happy and grateful that this little girl from Queens, New York, who was a special education teacher, and I loved teaching and I still love teaching, but
Hmm.
got this opportunity to jump out of a little life into a very big life and was embraced by the community on the floor so readily. And I loved it. I took to it like the first day I was there. I was like, oh my God, this is amazing.
Oh, nice.
So the level of generosity of the people on the floor, which of course were primarily men. There were very, very few women,
Right.
but I never thought about myself like that. I just thought, I'm here to learn to trade. The generosity of the men down there to help me accomplish that goal was incredible. And I'm
Yeah.
talking about some really big names that would take the time, the legendary names, that it always stayed with me that whatever I could do for somebody else who was just starting out and really had a serious interest and a blooming passion for this, I would help. I mean, that's kind of what drives me.
Oh, that's a great story. I've never heard that before. I really appreciate that. And that really reflects well on you and your heart, especially the part where you said, was it special needs or was it
I have a master's in special
oh
education,
wow. Oh, good for
and
you.
I before I went down to the floor, I was working as a consultant, a reading consultant in Harlem,
Oh wow.
actually, and I loved it. I loved it, but I wasn't making any money. I mean, it
Yeah,
was at
right.
that point in New York City, special education teacher was I was getting paid $9,000 a year.
Oh my gosh.
And I don't quite have your track record on divorce, but I was divorced at that point, very young,
Yeah.
and I it wasn't the kind of divorce where I was going to get any cash settlement because it was
Mm-hmm.
sort of a or more of an annulment. So
Right.
I had to fend for myself. My
Oh,
father and mother were had no money. My father was a mailman, um, so it was really I had to leave the special education field because I didn't
right.
see my way to be able to support myself.
Mm-hmm.
But after I spent all those years on the floor, I actually went back into education for a period of time, and I took the consulting to a whole other level. I became an inclusion specialist, which means I was being hired by school districts up and down the Eastern Seaboard to help them basically accommodate and modify whatever they had to all kids from any type of disability, whether it was just your garden variety learning disability to some really significant ones, into the mainstream or into the general education environment. So
Right.
I did that for a while, and then I wound up going back into the markets full time. But I go back and forth. I've
Yeah.
always yeah. So the teaching and the clarity of being able to wait to see my way above the fray, because my god, and when you want to put a kid with significant disabilities into general ed, there's a fray.
Oh
So
yeah.
I yeah, I would have to rise above that, and I did rise above that happily. So
Mm-hmm.
yeah, so that's these are all the things that mold me. The 14 years on the floor, obviously learning technical analysis because I was much physically smaller
Yeah.
than most of the people down there. Not that I'm a small person, but compared to most men, I was. My
Sure.
voice didn't carry, so I had to learn how to chart. Obviously, I had to learn how to play nice with others. I learned how the fundamental and macro picture impacted the most essential of things, which of course are commodities. So naturally, this former commodities trader has been very happy over the last couple of years. Uh, and then I had to adapt to an equity situation. So I've kind of done it all. Yeah. And in between,
Yeah.
like you mentioned, I try to just enjoy my husband, and we raised our niece, and there's grandkids and
Wow.
animals.
Nice.
And, I just moved my 89-year-old mother from New York to live with us here in Santa Fe. So,
Oh
it,
wow.
yeah, yeah. So it's been fun. But anyway, let's go back to your Fed question because I was delirious almost in a sense today about the Fed, not for the obvious reason that everybody made money in buying, the old throw the dart and it was going to go up theory,
Mm-hmm.
but also because it actually fits so well into everything, the 63-page document that I had put together, which I called How to Grow Your Wealth in 2023,
Right.
which was about the impending super cycle of commodities, which of course people have disagreed with me, saying we're going into disinflation, but what about the Fed? And they're going to continue to raise. And I'm saying exactly everything you said to me in the very beginning of the conversation, which is, wait a minute. I don't trust the Fed to really be accountable. Their
Mm-hmm.
credibility has already been sinking anyway over the last few years. The governments are just going to continue to throw money at people,
Yep.
and because they have to, because obviously people can't afford to pay for things they were able to afford before. We have social unrest because people are realizing that whatever wage increases they've gotten, if they've gotten them, then they're not matching the rate of inflation. We have major strikes going on in the UK today, in France. And I think eventually it'll trickle to this country as people realize, okay, so maybe I can afford, maybe my interest rate's going to stick around more like 4 to 5%. But really, I still can't afford to eat because if you've noticed, food prices continue to go up. Sugar's rallied.
Yep.
Coffee's rallied. Wheat and corn and soybeans look like they're ready to take off again. Obviously, the cost of copper and steel, and all of this is being reflected in the precious metals. So I was anticipating what I thought today was a huge misstep
Mm-hmm.
by the Federal Reserve. And
Sure.
I was willing to take the pain for a more fiscal soundness, so to speak, of a higher hike today, or at least more of a, okay, we've raised a lot, we'll do a quarter, but next month don't be surprised if we see CPI or PPI or PCE going up, that we're going to get more aggressive. He didn't say that.
Right.
What the market heard today was, we're doing a quarter, maybe we'll do another quarter. We see inflation might be peaking out here, but we're prepared just in case, which means exactly what I wrote in my report. They're being reactive, not proactive.
Mm-hmm.
And you couple that with everything else that's going on all over the world, the anti-globalism, the rise of populism, the obviously the potential with China, and now the trade war that seems to be continuing on the chip space, the Ukraine, Russia, the money we've spent to send more weapons over there, what's going on in the Middle East, and the recent strife between Israel and Iran, and I mean, it just goes on and on and on. And then you take the United States, which has been really basically looking at everything in such a U.S. centric way, but yet we're not really as anti-globalist as people would like.
Sure.
And so, especially under current administration, I mean, I think I'm not sure what our policies are. And and this is not to say whether I'm a Democrat
Right.
or a
For
Republican,
sure.
or because I spent 13 years on the floor literally not knowing who anybody voted for, because it
Mm-hmm.
was irrelevant.
Right.
All we wanted to do was make sure that we knew where we were in space and time, in terms of whether it was trading gold, or whether it was trading sugar, or whether it was trading oil, or Finex, which I eventually went to, and be prepared to catch the wave.
Mm-hmm.
And so the wave that I was ready to catch is exactly the wave that came today, because it wasn't just equities that rallied.
Mm-hmm.
It was also gold and silver and
Yep.
copper. And even though sugar and coffee did not go as high as they were yesterday, they sold off a little bit. They've already shown that they've broken out of a base, and they closed right before the Fed meeting happened. So they didn't have the chance to see the
Oh,
dollar tumble.
right.
Futures close early, right? Because they're
Mm.
yeah. So so I was like, oh my God, I can't believe the Fed really actually did what I expected them to do, because I don't believe that they really have the cojones to do what they need to do. And I think we're in for a lot of crap down
Yeah.
the road. So there you go.
One of the things that I've heard you say, which I hadn't heard a lot of other analysts or traders or anybody, is the word stagflation.
Hmm.
Can you give us a little brief description of that and your thoughts on
Okay, well,
stagflation?
first I have to say, give the caveat that all definitions have changed. The
Oh, isn't
other,
that true? Oh my
yeah, I
gosh.
yeah, so that I start my outlook with three words, basically, or three groups of words. One is chaos. We're heading
Mm.
into chaos.
Hmm.
I could, it's almost like if you take a moment and just tap into the universe, there's a frenetic sense that you start to feel if you are an uber sentient type being.
Hmm.
That's number one. Number
Yeah.
two is square peg, round hole. I feel like we are so trying to stick everything into the same round hole, but yet we're a bunch of square pegs, and that definitely includes definitions.
Hmm.
Last year, right? Recession. Well, we're going to change the definition of recession.
Yep.
Stagflation classically means that you're seeing a high unemployment and the economy has stopped, and yet the prices of goods continue to go up. Well,
Yeah.
clearly the labor market, you want to talk about square peg round hole. It's probably one of the most convoluted, interesting areas right now of
Yep.
the economy, is what's happening with the labor market. And then the third thing that I say is hashtag looking for inflation in all the wrong places.
Hmm.
And so I think that that's what's happening here. So equities, commodities, could go up at the same time, which we're seeing, but that doesn't necessarily reflect any real growth in the economy. We can already see the announcements of stock buybacks coming back. It's
Yep,
almost like, haven't these companies learned their lesson? But no, because the greed is palpable. And if you can goose up Meta stock by announcing, I don't know how many billions dollars worth of stock buybacks they announced today, on top of this like feeding frenzy of AI, which will be the future, but it's not going to grow us out of the economy right now. It's not ready. It's not mainstream. It's not retail. Um, that's what you're seeing. And
for
so it's
sure.
like wash, rinse, repeat. It's almost it's almost uncanny,
Yeah,
really.
it's insane out there. It's like spreading to all aspects of society. We're redefining words of all kinds. I mean,
Mhm.
you mentioned the job market. We've changed the algorithm on what we even use to count, and yet we're still using those numbers to compare to past numbers, which doesn't make any sense because we're not comparing apples to apples here. We're comparing apples to oranges, and that carries over into so many other aspects of economics as well. So it's insane. What about,
Right.
I
Like
noticed, go
on
ahead.
the if the Fed pause, if let's say the Fed really has pause, or
Hmm.
what you're seeing many analysts say, they pivot,
Right.
then the scene that we had from 2008 until 2022, where an extremely accommodative Fed actually helps because people can borrow it much less money and people start to do more things with that money, which in and of itself helps the economy grow. Well, first of all, the economy hasn't really grown all that great as far as I can see.
Right.
But secondly, it's like almost like there's a disbelief that inflation can go to levels beyond what we can even imagine, because in the 70s, which people like to compare, including myself, to as our last real period of inflation, it was
Hmm.
only impacting very few countries. Now you look at the list of countries who have increased inflation and it's global.
Right.
It's mind boggling to
Yeah,
me.
it's definitely a head scratcher. I'm definitely in the pivot camp, and primarily because of these debt bubbles, and the biggest being what I see are, US debt and what's going on with the Federal Reserve. And I don't see a way out of that. I mean, we can't tax people enough, we can't inflate it away, which is, traditionally been ways we've overcome, giant deficits like that. But I
Mhm.
really can't see any other way. And once again, it just seems like we may have a bigger cycle like we had in the last one, and then COVID, and then what are we going to do? We've changed the number from billions to trillions. Now what are we going to hit? Quintillions? Like, it doesn't make sense to me either. It's just, are we going to pick winners again? Like, how is this next loop going to go? Because the numbers don't add up. Something's not, I mean, debt bubbles seem to me to be at all time. You name anything and it's at an all-time high as far as debt goes. Credit card debt, personal debt, student debt. It just, the list goes on and on and
Government
on.
debt, right? It
Yeah.
does. Well,
Yeah.
yeah, and so right, and so any intelligent being has to question at what point does the bubble burst.
Right.
And what I think the Fed did, and especially if they wind up pivoting, they're just driving us closer to a bubble. But there are people who wrote about this bubble 10 years ago, and
Hmm.
they've been wrong. So this is why I love to talk about this stuff, and I think we're getting closer to that frenetic sense that I'm feeling.
Hmm.
But at the same time, you have to think as an investor. And of course, I hate the expression "don't fight the Fed," but it happens to be true. And if the Fed wants to see how far the economy can go based on relaxing the interest rate standards and ignoring inflation, because they figure eventually the cycle will be over, and so be it. Let's make
Yeah.
money buying stocks, but let's not forget to buy commodities. And that's where, again, my commodities trading days, and not just me, Keith Schneider, who's my husband, but also met him on the floor. He was a big commodities trader. Jeff Bish, who's our president, also on the floor, commodities trader. We all are salivating at the idea that I mean, today gold closed over 1960 an
Yeah.
ounce, and
Yeah.
people don't even think anything of it, and it's still cheap
Right.
relative
For
to
sure.
inflation if you go back to the formula from 1980.
Right.
So, yeah, I mean, I think it's great to buy equities, and I
Mm-hmm.
think people should be prepared. I always say it's not a matter of being right, it's a matter of being prepared. And I think people should be prepared that this can unravel quickly. And you have to watch the high yield bonds,
For
which are
sure.
underperforming the long bonds, which not
Mm-hmm.
only is a risk off, but also shows under the surface this whole idea of recession hasn't completely gone away.
Yeah.
And even though the earnings have been better, the fact is people are going, oh, wait a minute, these earnings were great. And I guess my 401k looks a little bit better, but I'm still not getting any money out of the company I'm working for.
Right.
So, it's just all of this. You just have to be mindful of it. And I think this is a time when people have to be super creative and learn how to trade commodities and particularly precious metals. I
For
have been
sure.
the one saying that I would not be shocked to see 5,000 in gold.
Yeah, I definitely agree with that. And I was a gold bug going way back. And I'm of the camp that gold is probably one of the things that's been manipulated too and kind of kicked down via paper gold and whatnot. So I'm definitely a fan of gold and have been for a while.
And you've got, the whole idea of fiat currency. I mean,
Hmm.
obviously, the dollar dropped fiercely after
Right.
the Fed announcement. And a lot of analysts go, oh, wow, that's so good for the market. But in an inflation environment where we're still, depending on the pocket that you look in the economy, at very high inflation numbers, is that really good? It just means that your dollar is going to buy a lot less.
Right.
And in terms of the dollar being good for exporting goods, we still haven't necessarily become, except for in oil, and we've tapped out almost, an exporting nation of
Oh
goods. We
gosh.
import
Yeah.
everything.
Yep.
And so it's like, I mean, right. You again, let's go back to scratch your head. But
Yep.
for right now, let's talk about right now. So in my outlook, I said that I had a target of 4,200 in the SPX. I didn't think it was going to hit like the first month of the year, but okay. Everything moves faster now.
Yeah.
And so why 4,200? Because if you look at a monthly chart, and I love when people say we're only 2% away from entering another bull market. These are all definitions that I toss out the door. I don't buy them. I don't believe in them, because you have to look out at certain other time frames. So if you look at at a monthly chart, the S&P 500 obviously broke down, uh, touched not quite touched an 80-month moving average,
Hmm.
but came within a few hundred points of it. And then, of course, we've had this huge rally. And the 23-month comes in at 4,200, the 80-month moving average, which would mean more of a stagflation other than a uber recession, depression type of thing, is about a 5 or 6 year business cycle. That comes in at 3,200. And so that's why I think the 3,200 to 4,200 ish range is what we're going to have over the next year or maybe longer.
Hmm.
So that doesn't mean we can't go to 4,300. I mean, it doesn't mean like it has to stop exactly at 4,200.
Right.
But the fact that we've gotten over 4,100 so fast after today just tells me that the complacency and the fact that all of a sudden everything is a buy just makes me a little bit wary. I certainly wouldn't be a buyer, let's say, much over 4,200. If anything, I would already be, as we getting closer, very seriously thinking about taking profits if you're in equities. But I would say that if we get any kind of dip in the commodity space, and we haven't even gotten a dip. I've been waiting for a dip in gold. Um, yeah, that's where your opportunity is going to be as things unravel. So I
For
don't see a
sure.
deep recession, but like I said, I see a stagnation,
Hmm.
I see a trading range, and I see a chaotic, frenetic situation where these sovereigns and these central banks. Now tomorrow's ECB, so
Hmm.
it's going to be interesting to see what Lagarde winds up doing.
Look, guard. Yeah.
Yeah, but
I just
still,
wanted to throw another plug in because you had
okay.
mentioned your Outlook 23. That can be found at marketgauge.com. It's a pop out or it's /outlook after market gauge. You've mentioned so many exciting things. I know you look at a lot of different indicators. You mentioned JNK a lot. I think you were even one of the people that threw out the yield curve inversion that happened like back before COVID, back in 2019. But right now, the yield curve is just I mean, I think the first half of all bonds are paying more than 5 year and beyond. Like it's just crazy world out there. What are your thoughts? You're saying no recession? What are your weighing in on that? Because traditionally, that's one of the big indicators is a yield curve inversion of a pending recession.
Well, we're not seeing that, are we? I mean,
No, it's
obviously,
insane.
it goes back to the labor market. So
Right.
I think it's the labor market you have to watch right now, and I would watch the high yield relationship to the long bonds, because if the long bonds continue to outperform, and they rallied today after the Fed
Hmm.
meeting, obviously,
Yeah.
but if they continue to outperform, if people don't come in to buy the high yield, high debt bonds, that's telling you that this whole frothiness right now is probably not going to be anything that's going to last too long. And the labor market, even though we have a 3.5% unemployment, and by the way, of course, we have new numbers coming out. What I thought was so interesting about the JOLTS report
Hmm.
was two things. One is the quitting rate hasn't really gone down. Two is the job openings obviously went way up, particularly in the service areas. And three is, the wages haven't really gone up. And so what if you put it all together, what it's telling you is that if you want anything done for you by somebody to take the job to do something for you as somewhat of a service economy, which we have here,
Right.
those people are either going to have to get paid if you want them to stick around, and if you want new ones, you're going to have to pay them a lot of money. And it could be kind of what was happening in COVID, where the people will take the money, work for a little bit, and then leave again. We're in a new world.
Yes.
So I just think that all of this means that the stagflation definition of you have to have higher unemployment is that it doesn't really reflect all these different areas of the employment. And we're going to see labor participation numbers on Friday too. But the anticipation is that that too will probably rise in terms of not as many people participating in the labor.
Right.
We'll see. I don't know.
Yeah.
So that's kind of why I'm watching all that relationship here with the labor numbers, the inflation numbers, the wages, and then of course the bonds, because the bonds give you a real understanding of the foundation of
Right.
everything,
Yeah.
and foundation is cracking a little. How far it cracks, we'll see.
For sure. Well, I know that the allotted time that we set, we've exceeded a little bit, but I need to ask you one more question if you don't mind,
Go ahead.
because this is a Bitcoin show. I just wanted to
Mm.
throw that out there and see your thoughts on Bitcoin.
Well, I traded a lot of Bitcoin. I've
Oh,
traded a
did
lot of
you? I didn't know that.
oh
Sorry to
yeah, oh
interrupt you,
yes.
but that I'm
Yeah,
shocked.
well,
Go ahead.
we have a person in our company named Holden Milstein. He and the company developed an actual trading model called Crypto
Oh,
Pulse. And right now we've been long Avalanche. We've made 50% profit on that already. We're long Solana, which obviously took off after the Fed meeting today. We've traded in and out of a lot of different things and a lot of the altcoins. And I happened to have a conversation with him today about this, because what I find interesting, what I've talked about on the media is I have a economic modern family, which by the way, you can also find on the website. We don't have time to get into, but it's really
sure.
one index, which is the Russell 2000, and six sectors, the newest one being Bitcoin. And I call it a teenager because it obviously is a teenager in terms of how long it's
Yep.
been around, but it's like a teenager in that it's still trying to figure out what its relationship is to the overall economy, right? So right now it's been a risk on asset, because obviously when interest rates were going up, Bitcoin didn't perform well. And let's take out all the other bad press that happened. And now today, obviously, well, it already started to show signs of life in anticipation, like the market did, that the Fed was going to be dovish.
Mm-hmm.
And then, of course, it rallied after. So he says, Holden, I looked at a chart today, and there's an interesting wedge on the chart with a monthly close over 24,500 being very bullish. But he feels that, and I agree with him, that that what we really want to watch out for is, when does Bitcoin depart as a risk on, risk off asset?
Right.
And we go back to the debate that we had 2 years ago, gold versus Bitcoin. Well, it's an inflation hedge, because it proves out not to be so much of an inflation hedge, right?
Right.
But I still think that that possibility is real and could happen,
Mm-hmm.
especially, again, going back to fiat currency. I mean, obviously, they've been trying to regulate this thing, the government, and it seems like they can't really figure out how, and there will
Right.
always be a loophole around that. But yeah, I would say that right now you have to be bullish, but just
Mm-hmm.
like the overall equities market, you have to be cautious, because if the Fed comes out in the next meeting, go, whoa, we made a mistake and we're going to go up 75 basis points again, Bitcoin will fall, the market
Mm-hmm.
will fall, and
Yeah.
even gold and silver and everything else will fall. The difference is that if there are other things going on that interest rates can't control, like, everything we just talked about, social unrest, geopolitics, supply issues, mother nature issues, because obviously these things grow, or mine, then we could see that great departure once again, where commodities continue to go up and the equities go down. And then we'll see what Bitcoin does in all of that. Is Bitcoin going to continue to be interest rate sensitive? I'd like to say at some point, no, it won't, but
Yeah.
it's not there yet.
Right. I have a ton to say on that, but I
We don't
will
have time.
refrain. So yeah, another time.
Well, we could do
Um,
this again.
yeah,
Let's,
that
because
sounds
we,
great.
okay.
I just get so excited talking and listening to you. It's terrific. Once again, hit us with where we can find you and your Outlook 2023 location.
Okay. Well, one thing I didn't say is I wrote a book called Plant
Oh,
Your Money Tree,
nice.
A Guide to Growing Your Wealth, which talks about my economic modern family, but talks about phases, using weekly moving averages to understand where price is and risk reward and all of that good stuff. It's a very easy to read book. Lots of anecdotes in that. Number two is my Outlook, which you can get on our site, marketgauge.com. It's free. I did a lot of research. I spent a month. I took 6 weeks off the media so that I could write this book,
Wow.
or I should say ebook. And then marketgauge.com itself, I write a daily blog called Mish's Daily. Weekly, we do a thing called Outlook, which is really basically gives you the benefit of our big view indicators, which are really our tools that measure market breadth, everything from ratios like, the gold to the S&P, or the wood to the gold, or the junk bonds to the TLTs, or what emerging markets are doing, et cetera, et cetera, et cetera. So you get we give a lot of free content because we're committed to education. And the other thing I want to mention is that we also have a registered investment advisory company called mgamllc.com. So if you want to find out more about that, and we're also involved in fintech because we're doing a partnership with Tactive Wealth, which is basically automated trading for you. So you give them money and they trade our models, and it's all done automatically with the right risk rewards and the right position sizing, et cetera, et cetera. So we're kind of all over the map.
Yeah.
Market Minute is my Twitter handle, but
Okay.
I'm also on Instagram. I'm also on LinkedIn. I'm also on Facebook. I'm everywhere.
Very nice. Well, I definitely appreciate you taking the time to have this talk, and I have enjoyed it and gotten a lot out of it, and I know a bunch of my listeners will do the same. So, thanks again, and have a great evening. I appreciate it.
Thank you, Lauren. It was so much fun to get to know you. And
Oh,
also, I love talking to somebody who thinks the way I do.
yes.